Hi, this is Zach from Zach's Traders Cafe with a look at some single stocks on Monday the 5th of September. Starting off with Antofagasta, where we've had a rebound off the floor of this rising formation from June and the 50-day moving average at 501 pence, while there's no end-of-day close back below that. We're looking for a retest of August resistance through the 570 level. Best case scenario target over the next month as high as 620, which is that June resistance line projection. Enquest is next, not a stock that we look at too much around here, but still a very, very strong chart here. We had the gap through the 50-day moving average in March, and that was a good signal of strength or potentially lasting strength for this stock. Support towards the 200-day moving average and an uptrend line from January, and while there's no break below that 24 pence zone, we should see a new leg up towards the 40 pence area, which was the best level of April, the end of April. If you're cautious on the stock, maybe wait for just an end-of-day close today above this 50-day moving average level around the 28 pence handle. On to Gulf Keystone, where it's been a story of misery over recent weeks and months, but we had that spike through towards the 200-day moving average at 4.03 pence. Looks like a bit of a flash in the pan situation, but notional support here back at the 10-day moving average of 2.64, so at least while we're above that, one could regard this situation as being a potential bottom fishing situation, even though obviously there are many rather tortuous fundamental factors in the background. Stock which was one of the best stocks of the last year for investors, but gap down today, down to 120 for Pantheon Resources now, so a bit of a shock there. Broken that support in place since July at 122, so really we want to see the shares close back above that, but the gap through down through the 200-day moving average of 133 suggesting that there is a fundamental change here as well as a technical one, and that risks taking us back towards the 100 pence zone. On to Persimmon and house builders. Still very much in focus at the moment. Just want to see here whether the rising wedge bearish formation that we've had since June is actually what it appears to be. So far, support has come in towards the floor of the formation around the 1830 level, but at least while we're above the 20-day moving average of 1791 would probably give this situation the benefit of the doubt, and for the shares to head back towards the 1900 pence zone, which is the area of the 200-day moving average. RBS in the news over the weekend on the basis that it seems to be sending some of its money from NatWest onto the more problematic RBS, Royal Bank of Scotland area of the business. Still holding up above the 20-day moving average and above this July support line at 194, but the risk is if we break back below that, then the recent rally could finally be over and we head back towards or below the 180 level. Finishing off with the more upbeat stock, and that comes in the form of Zoopla, where we've had the break of the 200-day moving average, or the 50-day moving average at the beginning of last month. Gap higher today through resistance through 320, so that 323 resistance there, and the situation now looks as though we can have at least a retest of that best resistance for the best peak there for May at £3.42 over the next couple of weeks. Only back below the 10-day average at 305 pence, really a negative for this situation. And that's it from me. More updates at the same time tomorrow.